Okay, hello, welcome everybody. Welcome to today's webinar. First of all, can you tell me if you can hear me and see my screen all right? Before I get going, that would be good. Thank you. Can anybody write into the chat window to confirm that you can hear and see me okay? Great, okay. Starting to get some confirmations, cool. Okay, well, my name is Hubert Miranda. Maybe you've been to one of my previous webinars here at Trading Strategy Guides. Just a quick introduction. I'm basically a full-time trader, and I got together to provide with Trading Strategy Guides to provide some good quality education for beginners and also advanced traders. And today's webinar will be basically about, well, everything about channels. It's a very interesting area and tool for trading, and I think it's also quite popular. So I think it's really good if one knows a few key techniques and tricks to improve that. So if you have any questions, just keep just write them into the chat, and we'll address them as we go along. And yeah, if anything's unclear, just write it in, and I'll pause and try and clarify everything along the way. So yeah, unless there's any questions on the outset or requests, I'll get going. Okay, voice is low. Somebody says, can you try and make sure that your volume in your YouTube video is up and also on your computer itself? Because I think I'm pretty high up on my volumes here on the mic, so I can't really turn it up much more than that. All right, so let's get going. Okay, guys. So, now, sorry, can you please confirm that you're seeing now this Word document here on your screen? Because just for technical confirmation, I forgot sometimes on which screen I'm flicking you on. So if you can see my Word document now on the screen, let me know. That would be great. Okay, let's give it a little bit more time. There might be a little delay. Okay, you see Twitter still. Hang on. Okay, hang on a second. Sorry. Sorry, guys, we'll almost be there. Just give me one more sec. Okay, so I believe now you should hopefully be about to see my... Yeah, I think now you're seeing it. Okay, great. Okay. All right. So, sorry for the delay, but now we get going. So I'm going to show you the way that I draw channels, and this is mainly based on, because I use Elliott wave theory in my trading. My channel drawing is kind of partially influenced by that, but it doesn't mean that you have to be an Elliott wave trader to know how to do that, because essentially the most important aspect you got to understand about channels is that channels are mostly occur as part of trend structure. So channels essentially, pretty much only occur when price is trending, sometimes within corrections. But when they occur within corrections, I'll show you an example later on, they're not really that useful for trading. So we're really wanting to focus on the trend channels. And I will talk you through that in detail, how you can spot that and draw them accurately. But I wanted to start off with some initial tips before I set out and go into that. And the first one is, if you're trading channels, the best thing to do is actually not to trade them by themselves, but at a point of confluence. So what I mean by at a point of confluence is, if I go back to a chart here, and let me see if I can find something. So I will talk about these channels that I've got on this chart here later on. But what I mean by a point of confluence is basically when you have a price approaching a channel line, and so I'm just making this black. It's and you say you want to trade the hit of the lower trend channel line upwards, then just relying on the channel line can be dangerous, because it's only one factor that other traders might look at. That other traders might be trying to see that same channel that you're looking at, but not everybody will. And so it's good if you can have some kind of other factor that coincides with that spot to be to make that spot stronger as a bouncing spot. So preferably you have a trend channel spot that coincides also with a horizontal support or resistance level. And I'm just trying to see if that is the case in say this euro dollar. In a way it is. And okay, yes it is. So I'm zooming out a lot here actually, so bear that in mind. But overall, what I want to show you here is that this spot here, which was part of a trend channel, which I'll show you later, kind of coincides with the top of this previous range out of which we price broke out here, right? So price rose up through, and now it's kind of in a way retesting the tops here. And so that is one factor that will add more weight to that point. So that's what I mean by point of confluence. You want to try and find other factors. Another factor could be, for example, if you use Fibonacci, to draw your Fibonacci tool on the previous swing and see if a Fibonacci retracement coincides with the channel. And let me just make those visible for you as well. And in this example of the Euro USD again, we can see that here we had the 38.2 Fibonacci retracement, which was pretty close to that bouncing spot. So you're starting to get a zone of support, and that's what I'm looking at. And in addition, look exactly where the 38.2 fib is, was also the 115 round number, which in itself acts as a support, because round numbers have that effect on a market. They traders place targets and stops at round numbers. Psychologically, that's what we do, and hence that's another confluence factor in itself. So I want to just convey that point almost before we venture into the channel theory. Always better to trade things together rather than by themselves, right? So just a few comments and questions are coming in. How to trade in downtrend? Yes, I'll cover that. Other confluence, more than 3 touches. Yeah, okay. Now then, another quick tip is that if you're trading channel breakouts rather than inside the channel, only trade them when they occur against the channel slope direction, and preferably only after 5 swings are complete. So what I mean by that, when I say trade breakouts only against the slope channel, is, for example, here. Stay in this chart for the moment. So we had like a channel. This red channel here is a channel by itself, and it's upward sloping. So say if price would have popped up above here out of the channel, that's with the sloping direction of the channel. If it breaks down from here, it's against the slope of the channel. And these are the only breaks that I would personally take, because when it breaks upwards with the channel, you can often get, most likely get fake breakouts where price just overshoots briefly and then comes right back into the channel. Whereas if it breaks out of the channel against the channel direction, you have a much more likelihood that it is a real break. It's not certain either for 100%, but that's definitely an important key to bear in mind. I'm trying to find now quickly a downward sloping scenario so that I could answer the other question as well. Maybe here. This is the US dollar yen chart. I'm just quickly drawing this in. So like here would have, for example, would have been an example where you may have been wanting to trade this. Now, depending on where you entered at this, I'm talking about this area here, this highlighted area. So depending on where you exactly entered, this could have been a successful trade, but as you can see, even then, eventually it came back into the channel. But here it's just an example of a downward sloping channel, and there's a break against the slope of the channel. Okay, so that's tip number 2. I will discuss the 5 swings later on when we go into the channel section itself. Then, okay, so when you draw channels, I'm writing here, learn to see mini fake breakouts within the price channel in order to improve accuracy of channels. So what I mean by that is that life isn't perfect. Nature has these little... So what I mean by that is that you won't always get a perfect trend channel. As much as you would like to draw it perfectly, it won't be quite possible. And the question is like, okay, do you connect the candle, where the candle closed, the body of the candle closed, or do you connect the wicks, or what do you do exactly? And to me, you've got to look at generally the bigger structure to define your channel well. And so there are several channels within this upswing, within this uptrend here of the New Zealand US dollar. But I've drawn that in, and I will explain to you later why I've drawn it the way I've done. But what I want to show you, for example, here is you got to mainly go for key swing lows and swing highs as your points. And see, I've used, for example, at this low, I used this point and not this point as my main reference. And that's actually because this earlier point was the lower point. So price went up and then came down, but it didn't quite break that bottom anymore. So that's why I'm taking that swing low, because that's in a way the true swing low. And I'm connecting it to the next major swing low. So even though we've overshot here, I brought it to this point. And so what I'm trying to show you here, for example, with these mini fake breakouts, is that look how price went out of the channel, but obviously came straight back in it. And you could say, okay, maybe I'll put my channel here, and that's quite valid too. But it's kind of, you just got to try and practice your eye and say, okay, which moves are the most relevant? And because you can tweak your channels one way or the other depending on what moves you mean. And see, because the main thrust is going up from that point, that little breakout is less relevant to me. I'm trying to see if I can find another example quickly to show you this. If I move this about a bit and try and go for a channel within that channel. Yeah, here, for example, to me, what is more important to me, instead of drawing it right at the top of these wicks, I'm using these main points here, and it doesn't matter to me that price overshoots here slightly, because that's quite normal. What I'm more interested in is how many touches I can get, and the more touches you can get on the channel line, the better. So I have here now, two precise touches at the top, and I have 1, 2, 3 precise touches at the bottom, and another. So here we get these slight overshoots, but in case of any doubt, the more precise touches you can get on the lines, the better. That will sort of in a way take out some of the noise. So it can often be that you can get like little fake outs along the way, but usually the line that you can connect the most precise touches to is one of the best trend channels to use. And and therefore the other ones you can then consider to be simply little mini fake outs. All right. And then the other, the final general tip I want to give you for channel trading is that to evaluate the price momentum before deciding to trade the channels. So, and I mean that it's best to only trade in the direction where there's more momentum. And so, what I mean by that, for example, if I try and find another example again. So yeah, I mean this US dollar yen channel that I just drew is potentially quite a good example, because you have quite a lot of downward force, especially this part here was very strong, and then you're getting a more choppy, I'm zooming in a bit here, so this part you had a lot of downward momentum, and then you get this more choppy upwards correction. So momentum is actually against you, because the previous momentum was to the downside. Now you're getting some move up, but it's not showing. Like if there would be extremely strong bull candles already within the channel approaching that the channel boundary, then that's different. But you've got to sort of keep in mind the general candle sizes and intensities, because that will obviously tell you, okay, is there still a lot of oomph in that move or not? Say for example, in another example, like here in the euro dollar, when it started to peter out in late 2017, within this red trend channel, you got a fairly decent spike to the upside still, but you're starting to get kind of just as big of a candle almost to the downside. Try it again, and then again you're getting fairly decent sized daily candles to the downside. So here you can feel that the momentum is already losing out to the upside. And so especially like here, look at that big daily red candle here that hit the trend channel for the second time. So we hit the trend channel first, got this bounce, but see, we needed 3 days to go up that distance. So we needed 3 days to go back up here, and then just 1 day wiped all of them out again, back down to here. So that's telling you momentum is shifting, and that's what, for example, would have been a good trend channel break to trade. I hope that's clear. Any questions regarding that? Okay, great. People seem to be following. Right. Now, okay, so these were general tips that you can basically, just add to your general trend channel trading anyway. And now I want to show you in a bit more detail how I draw channels exactly. And that has to do basically with the Elliott wave principle, but it's really good regardless of what kind of trader you are. If you use channels, that's really good. So the main thing to draw a channel is that you need 3 points. So you need to have 3 points that you connect at least. And in a trend, that means that the first point you can trade is essentially the second major pullback. So let's go back and oops, sorry about that. I'm just trying to find what I'm trying to show you what I mean. Okay. Let me get rid of one of these channels for the time being. So let's focus on this euro-dollar uptrend. So what I mean is that a trend moves at least in a 5-wave pattern in one direction. So you get 3 swings to the upside and 2 swings to the downside. Now, there can be obviously trend extensions where you get more swings, but in order for price to move more in one direction than the other, you need 5 swings in one direction. And so what I've been referring to is that as a channel starts, obviously you don't have a channel at the beginning, but you get an initial move up, and you could call that, that's what Eddie calls it, the swing 1. Let me make that label a bit bigger. You can just simply call that move swing 1. Then the first swing low after that, you can simply call wave 2, because it's the second swing in the sequence. The next swing up would obviously be the third swing, so wave 3. And so it's only at that point that you could begin to start the first idea of a trend channel. And you can add, because you have, say, 2 confirmed points, and then you can use it to gauge the 4th point as your first channel trading opportunity within the channel itself. So let's go quickly to my notes, and then I come back to the chart. So what I'm saying here in point 1, in an uptrend example, in order to gauge the second major pullback and swing low within a trend, which is what we would call the wave 4. So if I go back to my chart, we have first swing high, first swing low, second swing high, and now we were trying to gauge the second swing low as wave 4. So that's what I'm talking about. So in order to gauge the point where that second swing low ends, draw upper channel line from first swing high, i.e. wave 1, to second swing high, wave 3, and put the starting point of the lower channel line at the first swing low, which would be wave 2, which is what we've done here. So in order to gauge this pullback point and to trade it upwards, draw your channel from the channel tool here from the first swing high, which is here, but in order to, like, again, see, we've got a lot of candles here in one row, so I'm ignoring that spike. So I like to draw it like this. First swing high, second swing high, we're connecting the upper trend line like this, and then we put the lower trend channel around the start, of the at the point of the first swing low, and that will give us an approximation of where the second swing low will end, and then that could be the continuation of the channel itself. So again, ideally you want some sort of confluence at that point, like a horizontal level, like for example here, you can see there was a bounce at that level already beforehand, and then it came back here and bounced again. So once you've got that, then you can basically gauge the next swing, which would be the wave 5 of a channel, of a trend. It would be here, which would basically be, once you have that point, then, and once you have that confirmed, then you can draw your lines according to how they best are. So see, in this case, it missed the channel line a little bit. So you can either decide to adjust your channel then and make it fit to the 2 pullbacks in order to gauge then the next upswing. So I've now brought the channel right here and bringing it here. So we've got all these candles touching, we've got this touch, and look at how it pretty much forecasted the next end of the next swing up. So let's go back to our notes. So just to go over that, in order to gauge a second major pullback within a swing low, wave 4, in order to gauge this point, we connect these 2 points and then the parallel line. We're waiting for price to hit the channel line, ideally at some confluence, and then for the first time we can trade upwards. So then we move on to the next. So this was what I talked about as well. If second swing low, as in the wave 4, does not end at the lower channel line that you predicted through your first 3 point, adjust the channel by drawing the lower channel line from the first swing low to the second swing low, which is what I started to adjust. So when this originally missed with the original drawing of the line, I adjusted the channel so that this point and this point would meet in order to give me a more likely prediction for the next swing high. And that was that. So and then there's 2 things that happen. So if wave 1 and 3 still touch the upper trend line once you have hang on, sorry, there's just a question that's come into the chat. Leroy asks, so 3 to 4 is the execution, right? You mean the execution of the trade? Do you mean the execution of a trade itself? I think you mean that. So yeah, in that case, it's not 3 to 4. It's from point 4 to 0.5 essentially that you want to trade. So because we're establishing an uptrend, you want to go with the trend. So you're wanting to go with the momentum. So you're starting your trade would start somewhere in this area towards this area. Okay, great. So once you have your wave 4, your second swing low confirmed, and you then potentially adjust your channel lines, then this sentence becomes very important. If wave 1 and 3 still touch the upper trend line once you've adjusted it to the wave 2 and 4 points, it will most often very accurately forecast the end of the final third swing high of the trend, which is wave 5, so which is what I showed you in the example. Now there are other examples when if wave 3 is too strong and pretty much vertical and overshoots the upper trend line, then drawing the channel won't be as useful in the original manner. And let me just get to that chart. So I can show you this in, let me see. just trying to find an example where the trend was too strong. Okay. All right, yeah, so here. So in the US dollar yen, again, I'll get rid of these lines. In this case, now we have an unusual looking first swing, and you can say, look, there's already 1, 2, 3, 4, 5 highs. But once you get experience, you start to see what swings belong together. So in my opinion, this whole move from here to here is actually the first move of that uptrend. And so if you consider that this, in this case, is wave 1, and then we had a wave 2, and then we can see how wave 3 goes very sharply up and in some way overshoots. So if I were to, in order to gauge my wave 4, if I were to start connecting these two lines, wave 1 and wave 3, or say like so, oops, and put wave 2 here, then you can see how price is now not in the channel anymore, and how that channel is most likely not going to predict to us very well the end of swing 5. So this was 3, and then see what happens here. Like this channel here would not have predicted to us the high because this overshot. So that's where you then, if this middle swing is too strong, is too vertical, then wait for that next swing low to happen, the wave 4, and then use simply those, use those points and ignore the fact that it overshot the channel here. So use those two lower points as your base in order to gauge that 5th point again. Because see what happens here? We do this, and we are most likely have caught again the 5th swing of the trend right at the channel, which you may have missed if you would have drawn it according to that thing. So you've got to bear in mind this overshoot when there's like so much strength in that first move that the channel doesn't become viable, it becomes too steep. And I will come back to that example later on. So let's just go back to our notes quickly. So this is what I just talked about here. So if wave 3 is too strong and vertical and overshoots the upper trend line, you simply use the points of wave 2 and 4 and 1 in order to gauge the end of the final swing 5. And of course, it's always good you can keep both channels up. You can draw both channels, which I'll go back and redo, so that you have both of them as a reference for in your plan. And so then next, I've already mentioned these what I call overshoots or throwovers. And so what can happen is that, well, sometimes that 3rd swing is the strongest, and sometimes the 5th swing is the strongest. And that's what I call an overshoot. That's especially visible often in the stock market. So, like here, for example, in the Nasdaqs, what you have here this is obviously a long-term channel. And again, I get rid of this one for the moment. So price has been moving in that channel, and you see how right at the end, actually, where you think the trend is quite mature and exhausted, it shoots right over at the end, but then crashes back into the channel. That's what can happen as a final overshoot. And there's a way to estimating whether or not that fifth swing of a trend is going to do that or not. And that's by gauging the momentum with which the price approaches that final end, and also the volume. So in this case, let me put the numbers on here for you so you get a bit of a sense of how I see this channel again. Oops. So you have your wave 1 and wave 3 points. And then see, so this is a momentum indicator. This is the AO, the awesome oscillator, which you can find in your MetaTrader 4 platform under Bill Williams awesome oscillator. And you just put that on your chart. And this is a good momentum reading that I like to use. And you just basically look at how strong the peaks are relative to what price is doing. And so you can actually see that at this point, when price was shooting out of the trend channel here, we had this actually a maximum momentum. So we had a peak here that was higher than here. So in this case, price was coming into that fifth wave swing with a lot of power, and that is giving you the first sign that an overshoot is probably going to happen. If I go to the daily chart, you can see that better. See how relative to all the readings that have happened here before in this previous movements, here we're starting to build up momentum quite strongly. That's already higher here, even like say starting to be higher at this point than anywhere previously. So this is giving you a potential warning sign that the price might overshoot the channel. In other situations, like for example in the euro dollar, the opposite is the case. So what happens here is that, see, price is pushing higher here, but the momentum is already decreasing. So we had a peak here, and then it drops right back down. And although price is creating obviously a higher high twice, here it can't follow that anymore. So you can see that the momentum in this is dropping away, and you will most likely not get another overshoot of that trend line anymore, of that channel. So this is one way of gauging potential overshoots. And they actually often go hand in hand with what you could call a previous undershoot, as in that price doesn't retrace that far. So in this case, for example, here in the Nasdaq, you see how the fourth sideways swing was actually so weak that it didn't even hit the lower channel line, which is a potential, and started to go further, which is a potential sign that you will get an overshoot later on. Yeah, that's right. It's basically what I'm talking about divergence. There's also, you can add a volume indicator. So this is that volume indicator. And to gauge what the trading volume is in that final move. And you see how in this case, volume is increasing into that high. And so that's telling you it's higher than here. So this is another confirmation similar to the momentum indicator that a possible overshoot could be happening. And if we compare that then maybe to the euro dollar chart again, and I'll see what that does on here. The volume seems pretty steady. If I drop down one time frame, try and see what's happening here. Yeah, it's pretty steady. So there isn't an increase and not a decrease in volume exactly. So in that case, the volume wouldn't have given you too much information other than perhaps more leaning towards that it's not going to overshoot. Okay, so now just wanting to go through some of these examples to show you a bit more about what I mean. Are there any questions right now? I know Leroy is very communicative, which is great. I haven't heard from anybody else. Anybody who couldn't follow this so far, or any questions about something? Okay, so no questions. That's all right then. Now, I was also wanting to show you actually some indicators, channel indicators that Trading Strategy Guides had developed. And one of them is the CTI dashboard, which is really handy because it, if I try and make that a bit bigger, so you can see, it's basically a dashboard that gets added to the bottom of your chart, and it's automatically scanning for channels within the chart that you're looking at. So in this case, it's the euro pound, and it's showing you okay, sorry, one question came in here from Bill. The cheat sheet, yeah. You mean my little document here? I can definitely give that to be sent out via email to everybody who's attending. That's no problem. So with that dashboard, basically it will automatically highlight potential channels on any time frame that you want. So you can specify which time frames, which I think is really good because it gives you like an instant overview and a visual of what might be happening. So for example, it was highlighting on the here W1, so that's the weekly chart. It highlighted this, and then what's good is that I could just go to it myself and see whether I liked that channel that it was drawing, and draw it myself in. So it helps you really speed through the charts a bit. Same with here, like here the New Zealand dollar, it's showing you on various time frames potential channels. Like see, for example, on the 1 hour time frame, it's showing me a fairly clear channel from that little drawing. So I can then, I'll just go there myself quickly to the 1 hour chart. and see what that is about. And obviously the program is automatically pointing me to this downward channel here. And so it can help you definitely speed up finding these channels. So this is a really cool tool. There is in addition also like an automatic trend channeling tool, and that's the CTI tool itself, which is the CTI tool. I've got it already in my chart, and what I can show you is that actually literally draws the channels for you once you enable it. So I'll show you how that looks. So it's basically, it's what it does is it automatically starts to highlight you potential channels, and including, it's giving you these colors. At the moment I've chosen 3 Fibonacci divisions within the channel, which can often be, and it's showing you also the middle line. So these are all important points for channel trading. And as you can see, it's just automatically finding the spots and trying to highlight to you where potential trend might be forming. And also it'll send out, it can give you alert notifications when potential breakouts happen. So there's a lot of good features in that. That's the CTI tool. And then the last one is the CTI scanner, which is in a way similar a bit to the dashboard, but it's giving you a different reading. And it's basically related to whatever you've got open in your market watch window. So whatever instruments, for example, you've got here, it shows you what's happening here. So it says, for example, Euro USD 4-hour chart, channel breakdown. US yen 4-hour chart, channel break up. Australian yen 4-hour chart, prices in a channel. So again, here you can, in a way, it's like a quick overview that can tell you what price might be doing. And then you can just go there and check it out yourself. Obviously do your own checking and analysis just to make sure that what the program is picking up is really in according to how you trade and how you see things as well. But it just saves you a lot of time along the way. And you can find the information for that in the YouTube, below the video in YouTube. There will be some text, and it will have some links to videos that show you more about those indicators. So if I now just delete it from the chart so that it's less messy, I was wanting to show you one corrective channel in the euro pound, for example. So the program actually picked that up quite nicely here on the weekly chart. You see you have this downward sloping channel here, which price clearly broke out strongly in 2016. But what you're seeing here, this is not a trend structure really. You can see more sidewaysness in that whole move. And yes, you get lower lows. And of course, I'm looking at a huge time frame. So of course we had a downtrend within that. But it doesn't matter if you ignore the fact that it's on a weekly chart, because obviously a thing like this will form on any time frame. When you get like a more choppy sideways move against the previous trend direction, then that will be a correction. So if you draw a channel in that regard, then it's most likely going to obviously break in the direction of the trend. And so I haven't really focused too much on that, but I'm just telling you how channels can appear in this regard as well. So yeah, so that was that. Now let's just go to some final examples. And let's go to the Nasdaq. I think that's possibly quite interesting for people, because obviously many people are speculating that it might be topping and so on, topping out and go into a big downtrend. So basically, what you will get is you will get trends within trends. So you have different degrees of trend sometimes occurring. And I can show you this, how there will be channels created within each other. So one way of one channel you can draw essentially from these points. So you could call that your first swing, second swing, third swing. You can make that your fourth swing, for example. However, then, see, that's quite interesting now, because if you use the lower 2 points, you sort of had a gauge for the end of that final fifth swing, but that means your third swing is not connected to the point. So if you do that instead, then you get this overshoot happen, and look at how price came right back down to that channel later on. So when that happens, it's quite useful to draw multiple channels so that you have a reference for various degrees. Now, and also look at how I've labeled this as 1 because this might be 1 wave degree, but there was potentially obviously a swing already before that. So if I use these points, so this would be the 1 and 2 of a bigger degree. Oops. Then and then that would be 3, and then that's the big question. Now, my personal opinion is that we have not seen the top in the US equity market yet. I think we will get another rally to the upside, but we're coming pretty close to a much bigger correction, much bigger than what we've seen in the last few months. So, but if you go by these 2 points and consider this, maybe this was already the way forward, although I have a feeling this could easily come back down, test that channel line again before it goes up, or even possibly break below this point, but I think it ought to stay above this point in any case. So I have a feeling it will probably respect that red trend channel. And look, in this case, we have an overshot third wave. So we are probably not going to get that much of an overshoot on the next wave as well, especially because this was already so long. So this next, you can see if this comes down here again to test that once again, then by the time it climbs back up here, the channel line is actually high enough that it might create a new high above here. So it might creep up here, and what we will then have is we will have an approach to a new high with decreasing momentum. If I bring back my awesome oscillator, and zoom in a bit, so see how we had quite a strong momentum peak still here. Now, the next time it comes up here, I would definitely predict that we will have a lower reading than here, and then we are much more likely approaching the fifth swing final end of that uptrend that started all the way back in not just then, actually, there's more degrees than that concluding, I believe. Well, we might yet get another little spike after that, but overall, a trend that started in 2008 is soon coming to an end, so we could easily get a correction that's pretty substantial, quite down to here, perhaps down to 4,000 again or so. So this is just something I wanted to show you, that how different degrees can happen within a trend. I've got some notes here. It's an overshoots and multiple trend degrees. Okay, then if we quickly go back to the US yen, and I was wanting to show you here why I chose to label that as my wave 1, because you see how these moves here up to this point, they're overlapping each other a lot still. So you have this move, that's fine. Then, but this move is very short, and that next move moves back into the territory of that initial move, which, if this would be already its own full uptrend structure, that should not be happening anymore. And it's only after that high and then that pullback that we get a real lift off. So which is why I've chosen to label this as my wave 1 swing, and going to therefore draw my trend channel from that point and that point. And yeah, and then of course we have the question, like we said before, do we use this point or do we use that point? Now, obviously initially you will have those two swing highs first, and then in order to gauge the end of the fourth swing. And you could say, yeah, we had we didn't even create a bounce at that trend channel if I draw it like this. In fact, we went up and then we broke out of the channel. So in that case, I would definitely then go, like I said in the notes, actually go and use the established point. Oops. Sorry, guys. So now we have an overshot third swing, and see how now this was giving us a good, so far, a very accurate potential end for that fifth swing upwards. And so this is one thing you've got to bear in mind. So I've so far actually talked a lot about how to trade essentially that that fifth swing in a trend. You can of course then also trade the break of the channel. I would only trade a break of the channel after I see 5 swings complete, like here. And if we go back to the euro dollar example, that shows that quite nicely. So like you see, we've got our 3 swings here, our 5 swings, and as we discussed before, we're starting to get quite sharp momentum to the downside in these tops, sharp momentum to the downside developing, and then here we broke it retested, and that would have been a perfect place to enter a short for a channel break. And if I redraw that channel, actually, slightly, if I bring that over here, then go back to my lower time frame, come back up here, and see, you can sort of really play with these channel lines a bit. If I really plonk it perfectly at this break, pull back to the channel line, and then see how that still overall looks. If I zoom back out, see how beautifully perfect, still precise touches here. Got a bit of an undershoot here, but you're pretty good. So it's quite fascinating how these lines get respected extremely accurately, even if you zoom in on smaller time frames. So this would have been a really nice break to the downside. And I also wanted to show you how there are multiple degrees of channels and trends here as well. So because obviously we had this move, we had a break, but then price went up. And see here we have had a previous swing as well, which you may have noticed that I ignored so far, but that's just because I wanted to show you the channels within channels, so to speak. And basically here, and I'll label those as well with a different color. I make this red. So we have one, then we have a 2, and we have a 3 that's overshot actually that larger trend channel. So that 5 actually becomes the 3 of the of the bigger trend, and we have a 4, and so now we had overshoot already in the wave 3, so we're most likely not going to get an overshoot in wave 5, and sure enough we didn't. We pretty much respected that line. And there you go. I'm zooming in a bit now just to show you that a bit more close up. So especially once you have all in initial swings kind of concluding in 5 swings, then you can be pretty sure that a bigger correction is on the cards. And again, here we had a really nice break of that lower channel line, and obviously if anybody traded the euro dollar to the downside, that was a brilliant trade. Okay, so I hope that was of use. Any other questions? Okay, hang on, I just saw a question here from Jimmy earlier on. Do Fibonacci on the channels help us take trade given double confirmation? Yeah, for sure. Fibonacci and channels, they definitely go hand in hand nicely. I might try and show you this quickly on another example. Let me just get rid of these 2 tools quickly. So okay, now I might just, for anybody who wants to still hang around, I'll show you the Fibonacci's on this example, and also another example of how channels occur within channels. again. So what was interesting about this particular uptrend was that we had this very long, very powerful central wave. We had a small first wave, then a pullback, a really long one, and see how it overshot, came back into the channel, and then finished the fifth swing at the channel again, pretty much simply creating a double top here. Because this was already so extended, it didn't go any further. But say if we now put our Fibonacci from here to here, then sure enough, we had this pullback here. This pullback here went to the 38, went to the 38.2 Fibonacci retracement. And see, this is where just very simple trend counting, you don't have to be an expert in Elliott waves, can be really helpful, because you just go, first you have a new major low, that's the ultimate low for a long time, and you start counting from there, 1, 2, and see, this was just one continuous move. 3, and so even in this case, the channels got overshot, but those original points still got respected. So this would be a 4, and then here you had a 5 that was truncated, didn't go any further than that, but still adhered to the channel. Okay, I hope that answered your question, Jimmy. Like I said, you can bring any Confluence that you like. Maybe you'd like pivot points. Horizontal levels are, I think, one of my major things. So, like I said before, if you have a previous horizontal level, see, like here we had bang, touch, touch. So this was a touch from the downside. So this is an important horizontal level. Coincides with the Fibonacci, coincides pretty much more or less with this channel, so you got a good bounce zone. Okay, so I think that's it for today. Unless there are any further questions, I will wrap it up. I will make sure to forward this sheet, and wish you all a great rest of your day, or have a good night. All the best. Thank you.